traders are answering your questions. First up, we have a video question for you, Pete.
Hi, David from Wheeling, Illinois. Question for one of my ponytail brother Nigerian brothers. Sometimes I'll find a stock I want to put a option position on, and the bid offer spreads will be 20, 30% or more in and out. Any suggestions you can give me, I'd appreciate. Thanks.
Okay, Pete, what do you say?
Well, David, I'll tell you what, there is a lot trading in between that bid and the ask, so that would be my first thing. But also, make sure that is the case. Not every option is going to trade the same. Not every stock is going to trade the same in terms of those options. And because of that, you have to know that. So try to work some trades in between. If those work, that's fantastic. If not, don't give up those spreads. It's not worth the trade. So then just walk away and find a new one. All
right, Tiffany, a video question for you now.
Yep.
Hello, this is Caroline from Ottawa, Ontario. I'd like to ask about ticker symbol OTRK, Ontrak. Doesn't seem to be going anywhere these days, and I really want to stay along with this stock. Thank you.
Thank you for the question. Okay, OTRK, Tiff.
Yeah, so you got to think long-term, Colleen. I mean, we're not trading for the next couple of days. I'm a long-term investor. I own Ontrak. It's at 58, a little bit above 58 right now. The high was 83. It's up 260% for the year, but we think that, you know, we love the AI power behind it, and we think the telehealth is here to stay.
Okay, thank
you
very much.
It's a long-term play.
Okay. All right, Josh, to you. Matt in Chicago. Bristol Myers, what are your thoughts about the stock as a long-term investment?
I think it's okay for long-term investment with a very big caveat. Goldman Sachs gave it a conviction buy rating today. They're basically saying this is the cheapest of all the large cap pharma stocks at 8 times 21 earnings, but there's a reason. 90% of Bristol Myers' current revenue goes off patent by 2030. So now they have to spend the next decade figuring out how to replace that, and if they're very fortunate, outgrow that, all those patent expiries. So this is not my type of situation typically, but 8 times earnings, 3% dividend yield, a lot of optionality. I could see how this stock would work for people that are very patient, but this is not a buy for me. It's not my cup of tea.
Okay, Jenny, lastly to you from Beach Living in South Walton Beach, Florida. Interested in high dividend paying stocks, can you ask Jenny if she has one that has good coverage and might be able to actually raise the dividend in the future? What do you say, Jenny?
Well, I'm going to give you my newest portfolio addition, which we just bought last week, which is SL Green. They're the largest office landlord in New York City, in Manhattan. They have, don't get scared when you hear office landlord New York City. They have 94% same-store occupancy. They're collecting 97% of rates. Yeah. Meanwhile, it's a 6% yield, and they just increased the dividend and issued a special dividend. The dividend's now going to be $3.64 a share. In terms of coverage, they're still going to earn, and they just gave guidance on this last week too, they should still earn about $6.30, maybe $6.50 a share. So you've got tons of great coverage there. One last thing, which I think is very exciting. The public shares reflect a cap rate, which is the rent divided by the building price, of 8.25%. Meanwhile, in the private markets, those same buildings are trading at about a 4 to 4.5% rate. So you have a huge discount in the public shares. They're still down 40% year to date. So you've got the dividend, you've got the coverage, you've got the growth. I think it's a terrific investment right now.